Hey Bowtie Nation, Joseph Hogue with your weekly stock market update, now coming at you Sunday at noon before the week starts with the stocks to watch and the stock market news you need to see. And Nation, Nvidia may be the face of AI, and for good reason with its 1,300% return over the 5 years. Millionaires have been minted on Jensen Huang's brilliance. But every champion is eventually defeated, and one stock is quietly beating Nvidia at the AI arms race. This company is already a 10x return since recommending it in 2020 and has another 10x coming. I'm going to explain why it's happening, along with important updates to shares of Adobe, ADBE, Marvell Technology, ticker MRVL, and an update to our stock market outlook. First, though, back to that stock leading the AI arms race. And don't get me wrong, Nvidia has been the undisputed champion for investors, with the stock up over 1,300% in that 5 year period. But Nation, one hard lesson I learned on a cold February 1990 that all champions fall eventually and a new champ is crowned. Now, I'm not saying any company is growing bigger than Nvidia or is going to take its crown as king of AI. The tech giant is expected to grow sales by almost 70% this year to over $366 billion, and fast developments in its next generation Rubin platform, expected to go into production later this year, is going to keep growing tens of billions in sales each year. But for the math nerds out there like myself looking to make money, well, the math, it just ain't mathin' for Nvidia. Think about it here. Nvidia is now a $4.45 trillion company. For the stock to do another 1,300% for investors, that means it has to grow to a $53 trillion behemoth. That is larger than the economies of the United States and China combined. But there is one company that still has that 10x room to grow in that is already beating Nvidia over the last year. And in fact, Broadcom, ticker AVGO, has already been a 10x return for longtime citizens here in the Bowtie Nation. I first recommended this stock in December 2020 as one of my favorites, and don't let that $400 stock price fool you. Broadcom at that time was only a $163 billion company. I know, tiny, right? Over the past 5 years, it's become a $1.58 trillion company, almost 10 times larger. Shares have split and investors have made almost a 900% return. And just in the last year, shares of Broadcom have jumped 73%, outpacing the 56% return on Nvidia, and I believe we're just getting started. Now, Nation, that doesn't mean you have to dump all your shares of Nvidia or that it won't be a solid return, but if you want that 10x potential, you need to be looking for companies changing the world in this AI arms race and with more room to run. There is a reason why Broadcom is that stock. CEO Tan highlighted his target for $100 billion in AI chip sales on the earnings call last week. The company helped develop Google's TPU chips that have seen its stock jump and expect to ship huge volume in chips to both OpenAI and Anthropic over the next year. So if you think of that target from just $20 billion in chip sales last year, a $100 billion milestone would be exponential growth. Now it's clear that the custom AI chips, the tensor processing units, those TPUs that Broadcom does so well are the next leap for AI data centers. But that's not the only reason this company is going to be eating Nvidia's lunch. Folks, AI clusters are getting bigger, in fact, ginormous. A cluster is just the group of servers connected together, basically forming one big machine to do AI operations, each server housing thousands of AI chips, networking switches, and storage systems. Broadcom's AI infrastructure roadmap shows clusters have grown from about 4,000 accelerators in 2022 to over 30,000 today and could reach a million AI chips per cluster by 2027. All those semiconductors require ultra-fast switching, optical interconnects, networking chips, and connectivity, and Broadcom sells all of it. Through acquisitions like the 2023 VMware deal, along with internal development, Broadcom has expanded into nearly every critical component in the AI data center buildout. While others like Nvidia may provide some components, nobody reaches Broadcom's scope for being able to cross-sell into that AI infrastructure. Beyond that AI chip technology, Broadcom's advantage in connectivity, the networking that moves data back and forth from server to server and to storage, is unmatchable. And I know all the technical jargon, the acronyms like GPU and TPU, the chip specifications, and all that computer talk can be confusing, but folks, you do not have to be an engineer to pick tech stocks because all you really need is the story told by the numbers. We do a lot of analysis here on the channel, but it really comes down to two numbers that you need to check for any stock. You're first looking at the profitability, so the operating and the profit margins. What percentage of revenue is the company converting into that operating profits and net income? Here we see that clue into Nvidia's competitive advantage. It's 55% profit margin. That means after paying all costs, production, suppliers, operating cost, debt, that Nvidia is converting over one half of its revenue into profits. So when you compare that to margins for competitors like Advanced Micro Devices, AMD, with its profit margin of just 12%, that tells you Nvidia has something special, power over its buyers and suppliers, and a superb management to convert at such a high level. Now, profitability is only half of the game, though. Who cares how much revenue you can convert if you're not booking any growth in those sales? So, here you also want to look at the sales growth and see Nvidia is growing its revenue by 70% this year and forecast for 27% next. And here, while I do like shares of AMD as well, that revenue growth of 34% this year is half as much as Nvidia's pace. And finally, here, where the rubber meets the road, is in this earnings and the earnings growth. And this is where we see that combination of the high profit margin and the faster sales growth become a champion of stocks. On forecast for $8.25 in earnings this year against $4.77 last year, Nvidia is leveraging that 70% sales growth into 73% earnings growth. And why this is so important that earnings are growing just as fast or faster than revenue is because profitability has been the biggest separator of the good from great in AI stocks. Perfect example here is Supermicrocomputer, ticker SMCI, absolutely dominating the server race with 88% sales growth this year, but profitability is for shit. The company is spending so much on R&D, marketing, and just not squeezing its suppliers enough that it's only converting 3% of that revenue into profits. That 88% growth of revenue is only translating to an 8.7% increase in earnings this year, from $2.06 last year to $2.24 per share this year. I know it's a lot of numbers and analysis, but folks, I want to give you more than just a list of stocks to buy. I want to give you the tools to find your own stocks, to not be dependent on some Yahoo in a bow tie, and these two steps are your best clue into the stocks to buy. Companies that are growing their revenue faster than competitors and that are converting those sales into earnings at a pace that is closer or even higher to that sales growth. And that brings us right back to Broadcom, forecast to grow revenue by 64% this year to $104 billion, and more importantly, to grow earnings at that same 64% pace to $11.18 per share. And not only that, but the solid 44% revenue growth expected next year is forecast to 54% earnings growth to $17 per share. So not only is it growing its revenue at a very strong clip, but also getting more efficient and converting more of it into earnings each year. So with this simple analysis, if you didn't know anything else, if you weren't sure about Broadcom's tech advantage and so many inputs in the AI data center boom, you would still know that you found a $1.5 trillion company that is growing sales faster than peers, that is extremely profitable and converting those sales into earnings. Now, investors have been willing to pay an average of 22 times price to sales for the stock over the last year. That's a market cap of 22 times the company's revenue, a key valuation metric where you take the market cap divided by the sales. That gives you this price to sales ratio. If we take that forecasted revenue of $151 billion for next year, multiply it by that average 22 times factor, we get a market cap of $3.3 trillion, more than double where the stock is trading at right now. And that is just the beginning. That $3.3 trillion would still leave a lot of room to grow. Broadcom is going to dominate the AI infrastructure story alongside Nvidia, and you do not want to miss out on this stock. I'm going to show you the stocks I'm watching this week next, but if you haven't yet, join me on the Blossom Investing app with the special invite link I'll leave in the description. It's totally free to download, and besides seeing the stocks I'm buying in real time, you're going to see what over 500,000 investors are talking about in the social feed. So look for that link or just scan the QR code here. Looking at the stocks I'm watching this week, UiPath, ticker PATH, is down from its December peak by almost half, but going into Wednesday's earnings at an attractive valuation. The automation provider has rolled out new AI tools for its healthcare field that are supercharging growth and extending its reach into the AI agentic theme. The company is expected to post 10% revenue growth for the quarter, just under the 11.5% pace forecast for the full year. Now, what I like here, though, is that the company is leveraging that growth into 26% pop in earnings this year, from 53 cents to 67 cents per share. That's showing the kind of profitability boost we're looking for in these tech growth stocks. Now, that price action has been hit or miss on earnings day over the last few years, with shares up 5 reports and down in another 5, though earnings beats over the last 3 quarters have been good. Now, I like the stock for that long term and would put most of my investment in before earnings, but hold a little back just in case we get a drop on Wednesday's report. Adobe Inc., ticker ADBE, goes into earnings Thursday with the stock popping 13% over the last 2 weeks after a brutal sell off of 37% over the last year. Before you get too excited, though, here, folks, the upside of late has been a rebound across all software stocks, and not necessarily because Adobe is doing any better. Shares of software peers like ServiceNow, ticker NOW, Salesforce, CRM, and Workday have all bounced after those AI fears hit the stock since November. Now, there's still room for Adobe to surprise higher on earnings with forecasts for almost 10% growth in sales and 15% earnings growth for the quarter. I do think management is going to talk up some cost cutting efforts and maybe even increase the company's share repurchase program, which could boost the stock price on that news. Longer term, though, is still a big question mark here, as the AI is going to continue to eat into sales. So, good for a near term trade, but I feel there's safer long term growth out there in other stocks. And Marvell Technology, ticker MRVL, popped 16% on its earnings after I highlighted the stock in last week's market update. We've been watching this accelerator chip company as a competitor to Broadcom, and while I think AVGO has more potential in that AI supply chain, Marvell is doing everything right. The company reported 22% sales growth to a record $2.2 billion and for earnings of $19 million, both beating analyst forecasts. The CEO is also saying Marvell expects year-over-year revenue growth to accelerate each quarter of this year for that AI theme. While the 31% revenue growth expected this year is less than half the 64% pace booked by its competitor Broadcom, Marvell is leveraging it into a 74% increase in earnings, and these shares trade relatively cheap versus AVGO, so definitely one to watch as well. Updating our stock market outlook, earnings are all but wrapped up, but it is a full week for economic news with the consumer data, GDP, and the all-important inflation data this week. We're going to see first the Consumer Price Index, that CPI, on Wednesday, with forecasts for the same 2.5% pace we saw last month. Then on Friday is the Personal Consumptions Expenditures, the PCE report, which drops with forecasts to show an even higher 3.1% pace of price increases. Now, of course, the big question mark for inflation and the Fed is how long do oil prices stay high? The average price of gas across the United States jumped to $3.32 last week, with some states pushing $5 a gallon. That average is 14% higher than last month and is likely to go even higher, with oil up 43% in the last month and every 10% increase in gas hitting consumers to the tune of $23 billion a year. Now, the Fed does meet here on the 18th and is expected to keep rates steady. The central bank is likely going to point to fuel inflation as temporary for now, but overall inflation of 3% is already well above that 2% target, so there isn't going to be any rush to lower interest rates. Friday's surprisingly bad jobs report showing the U.S. lost 92,000 jobs in February, and that unemployment rate went up. It will help to keep those rate cuts on deck for some time this year, but not for a few months anyway. So nation, without the hope for free money interest rate cuts, and with corporate earnings all but done for the quarter, there isn't much to support the market here, so stocks are likely to continue sideways at best, and you could see another sell-off here in March. But that's against stealthy stimulus and the hundreds of billions of dollars from tax cuts, both to personal income taxes and corporate tax changes that are going to save companies billions. We should start seeing these come through in April, so I continue to buy on any dips in stocks. Folks, it is a midterm election year, and while the market is often sideways for much of those years, it comes roaring back later, so take advantage of this recent sell-off. Join me on the Blossom social app with a special invite link in the description and see what over 500,000 investors are talking about. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.